The secret to making money in stocks is staying invested long term, through good times and bad. Here is how to do it. In this video, I'm going to be telling 3 excuses that keep you from making money in stock markets. First thing first, you will need a brokerage account before you can start investing. Here is how to open one. It only takes about 15 minutes. I'm going to give you Robinhood platform's link below. You may get up to $200 free stocks. The stock market's average return is a cool 10% annually, better than you can find in a bank account or bonds. So why do so many people fail to earn that 10%? Despite investing in the stock market, many don't stay invested long enough. The key to making money in the stocks is remaining in the stock market. Your length of time in the market is the best predictor of your total performance. A majority of US investors who says time in the market was better than timing the market for making money. Unfortunately, many people often move in and out of the stock market at the worst possible time, missing out on annual returns to make money investing in stocks. Stay invested, more time equals more opportunity for your investments to go up. The best companies tend to increase their profits over time, and investors reward these greater earnings with a higher stock price. That higher price translates into a returns for investors who owns their stocks. More time in the market also allows you to collect dividends if the company pays them. If you are trading in and out of the market on a daily, weekly, or monthly basis, you can kiss those dividends goodbye because you likely want to own the stocks at the critical points on the calendar to capture the payout. The stock market is the only market where the goods go on sale and everyone becomes too afraid to buy. That may sound silly, but it's exactly what happens when the market dips even a few percent, as it often does. Investors become scared and sell in a panic. Yet when prices rise, investors plunge headlong. It's a perfect recipe for buying high and selling low. To avoid both of these extremes, investors have to understand the typical lies they tell themselves. Here are 3 of the biggest. 3 excuses that keep you from making money investing. Number 1, I will wait until the stock market is safe to invest. This excuse is used by investors after a stock have declined. Once they are too afraid to buy into the market, maybe stocks have been declining a few days in a row, or perhaps they have been on a long-term decline. But when investors say they are waiting for it to be safe, they mean they are waiting for prices to climb. So waiting for safety is just a way to end up paying higher prices. And indeed, it is often merely a perception of safety that investors are paying for. Number 2, I will buy back next week when it's lower. This excuse is used by would-be buyers as they wait for the stock to drop. But as the data says, investors never knows which way stocks will move on any given day, especially in the short term. A stock or markets could just as easily rise as fall next week. Smart investors buy stocks when they are cheap and hold them over time. Number 3, I am bored of this stock, so I'm selling. This excuse is used by investors who need excitement from their investments, like action in a casino. But smart investing is actually boring. The best investors sit on their stocks for years and years, letting them compound gains. Investing is not a quick hit game. Usually all the gains come while you are wait, not while you are trading in and out of the market.